Hey everyone, John Henry here, Slingshot Futures Trading Group, SSFTG. Welcome to this video. Now, you're probably already assuming what this video is about because this probably looks pretty familiar if you've watched several of the other ones in the series. If you haven't, this looks very similar to the candle-by-candle analysis, and that is going to be kind of the idea, but we're going to be taking it in a slightly different direction this time around per request of one of our members. So the idea here is that we're going to be breaking down the ES chart to locate areas of interest for both scalpers and swing traders while going through the 5-minute candle by candle. So it's kind of like a combination of the 5-minute candle by candle video as well as the technical side of overanalyzed. This is where, more along the lines of how a trader would use the psychology at the moment to create a trade setup and then how it could be managed along the way. I think that's a really cool concept, and I'm definitely interested in jumping down that rabbit hole. So let's jump on in, huh? So as far as the first candle of the day, we're starting off with a gap to the upside. And if we zoom out a little bit further, we can see that it is not just any old gap to the upside, it is an outside gap to the upside. So immediately right out of the gates, we know there's a lot of bullish pressure. Maybe something happened in the overnight, or obviously if we utilize our eyeballs here, we can see that something was actually taking place the day before, and it looks like it didn't stop. So with that amount of bullishness to the upside, we have to assume that buyers are going to want to try to be, and continue to be, buyers on this move. So where this is setting up right now as a weak bear bar, it may not happen. I don't want to buy above the top because it's forcing me to buy at the high. But if I were to structure some type of trade setup, possibly buying below this candle's low would make a lot of sense. Now, the problem is, where do you put your stop, right? I mean, the stop location has to be drastic. It's got to be way down here. And the only way that would make any sense whatsoever is if you're looking as a scalper, and I have a really hard time calling that a scalp all the way back up to 86.75. So from this perspective, I would love to go long, under this and maybe structure a stop a little bit sooner, but just there's nothing to really work with at this point in time until we get a little bit more. We've got a nice continuation bear bar to the downside, and this would be the second candle of the structured move, where if buyers were buying in and they've got some deep pockets, then they're in, right? They're looking for a continuation to the upside. That doesn't necessarily help me at this point in time because the risk is just too rich for my tastes. But as far as things are concerned, we've got this kind of heavy bear bar continuation to the downside. And realistically, a logical point of interest would be trying to duck back to fill the gap. But remember the context here. Look at what they left off the day last time. Bull bar, bull bar, bull bar, bull bar, bull bar. Not a single bear bar in sight. Obviously, that didn't stop with this gap higher, so I have to assume that I'm still looking for a reason to buy. They might not be able to make it back to settlement. If they do, I'm paying attention. Again, we really don't have anything to structure a stop off of yet, so we've got to kind of wait. We know that we want to try to be buyers in this area. It makes a lot of sense. It feels like we're kind of buying a bit high, but at least we're trying to buy on the pullback. Okay. Now we've got a nice bull bar, and this is where bulls will be looking for a continuation play to the upside. If we're looking at it from a volume perspective, from the top to the bottom, we have a volume node that is sitting right here at 43.78. Now, that's a bit troublesome, right? We've got the attempt from the sellers to the downside, and realistically, if I want to go long, we've got to be breaking above some of this previous volume there. Another zone of interest might be that giant impulse leg to the upside before the end of the day, but that's not until 62.50. So all things considered here, I mean, I would like to go long, and realistically, I think a lot of traders possibly will. It's just going to be a bit challenging. The nice thing is, if traders are going to take a crack at it, we have a spot to at least structure a stop. Right now, traders can put a stop underneath the lows. It doesn't offer up a lot of opportunity. It kind of creates a 0.5-to-1 back up to the highs, and I doubt a 2-to-1 would even fit in this. Yeah, it's way up there. So a 2-to-1 is possible, but given how early it is and the fact that we still haven't filled settlement, I mean, I think that's the only way that you could realistically take it would be as a scalp. That's the only thing that fits, and that's the only thing that would have the probability here to allow traders to really get kind of the meat, if you will, of this range that's kind of forming at the beginning. So scalpers will potentially try to give it a crack higher, and now they at least have a candle to work with, and it's a beautiful bull bar to start things off. Now, it doesn't mean that they can't go for 2-to-1s, but realistically, a scalper's objective back up to the open, at least, makes some sense. And given the fact that they're going to be fighting through this 43.78, if it has a hard time here, a lot of these traders aren't going to be hanging out. So it's going to be a long or get out. Okay, and a beautiful continuation back up. They did actually make it back up to the highs, but you'll notice where that candle closed. I don't believe in coincidences. You've heard me say that probably a million times. The fact that it closed right there tells us very obviously that buyers weren't looking for very much. They were looking for scalps, and that's it. And if we continue this further forward, let's see if the volume has changed. It has not. Okay. Now that's kind of interesting because we've broken back above the volume node with a very strong bull bar. This may be trying to get a twin reversal. Here's the thing, okay? If we're going to be buying on a retest of value and a stop underneath the lows, that puts a 2-to-1 target like up in the sky. So it definitely doesn't fit a high probability scenario. The problem is if traders are going to be buying at 43.78 and risking underneath the lows, they're going to be looking at, again, we've got that really difficult scenario of trying to rally all the way up to a positive half DP. It's going to be a very difficult move. Low probability would make sense, and chances are it's not going to work. Given the context and the fact that we haven't seen another drive down, a real consideration here is that scalpers just don't have an argument. If they're going to be buying underneath this area, then realistically, they're going to have to assume that they might have to build in, right? We've got that settlement underneath the low. There's still a lot of things that are kind of dragging on the market, and we've already seen that the bulls really weren't looking for much. So the next follow through here after this move back up, the fact that they hit that base, I mean, it closed to the tick on their targets at the 0.5-to-1, where scalpers will take profit. So realistically, it would make sense to see the market pull back. If we can get a little bit of a hold above this, like a weak bear bar closing like this, or a bull bar that rejected that area, that could potentially re-up the bulls going, kind of coming back into this for another break above the highs. Oh, geez. The very next candle gaps down. The bull bar closed, and it gapped down on the open of the next candle. That could show either the fact that we are in a bit of sideways range. Use some of the previous information. Has there been a lot of those before? Well, there was one right there. Seeing another one. Now, it's interesting that both of them have been down. We know that there's been a lot of weakness. Seeing both of those gaps to the downside could be a little bit of a clue. And this is a heck of a bear bar. We were talking about wanting to see a weak bear bar closing above this POC. That's not it. That didn't do it. Let's continue further forward, see if anything changed. It actually looks like it changed by a tick, 77.75. Not enough to really change the context here. The bears do have a decent move to the downside, and given the fact that the bulls have failed to the up, it's likely that a lot of sellers will look to sell underneath this 75 at 75.25, looking for a continuation to the downside to try to fill the gap. Now, what's interesting here is that the target doesn't actually go down to the gap. The scalper's objective isn't down at the gap if they're shorting this bear bar. Now, if they were utilizing a higher stop, even then, it doesn't hit the gap. So, man, they may have some trouble getting down to that gap. A lot of sellers who are actually going to take the risk of selling this move, they're going to be taking their profit ahead of that. So, I mean, it actually might be kind of a challenge here. I think to gain the highest probability and the understanding that we have a pretty strong trend up, the only selling that makes sense might even be below this bull bar, trying to get the rotation down once again. It doesn't actually have a target by the settlement. And that is also where this bear bar closed. So this could be a sell to close type of scenario where sellers will just sell into it knowing, hey, we're at the entry spot. It's right where the entry for the sellers on below the bull bar would have taken it. And the target's right below the lows. It's probably one of the most favorable locations if sellers are going to look for a continuation. Either way, we know that it's going to be a tough time getting down to those lows and filling that settlement. Okay, well, there's the proof in the pudding, huh? So we've got the continuation down. The market closes very, very weak. Now, here's the first objective. Let's look at some of the other ones. We had this guy, which was down there. That also filled all the way down at the bottom, which means that this one is still left over. That is the widest of the stops and the worst of the probabilities, given how late of an entry it is. But realistically, that's the only one that didn't actually get filled. So 2 of the 3 on the scalps to the downside got filled. That means that if this starts closing back to the upside, we might have some trouble. We already know that there was going to be some issues down here, and the fact that there are some potential scalpers that are short that are possibly stuck, while all of the other ones have been taken care of, that's a really big clue. Now let's see what happened in the volume. Let's move that down a little ways here. It's staying put at the 43.77.75. Jeez, too many sevens in there. So as far as the POC is concerned, the bulls will be looking for a continuation, but they're going to have a hard time until we break above this, especially given that we haven't had settlement. The big context here is that we've got a lot of potentially trapped bears if this rotates back up. It's still closing underneath the settlement, so from this perspective, they still have a shot. I would be concerned at this point if it doesn't start going. Okay, we've got the bull bar back to the upside. Now, normally, it would feel incredibly awkward buying this bull bar because we just came off of a double top. Maybe this is just a range. You're buying directly into the POC. There's a lot of issues here that a lot of traders will have kind of put into context. Oh, wait, we move the POC and we can see things have changed. Now, all of a sudden, the POC is down at 76.25 and the market's closing above it. We know there are stuck shorts. They were looking for the settlement, which they did not get it. We just had the last attempt off a fantastic bull bar, which, again, scalpers were able to grab. It rotates back down. Now we have another rotation back up. While sellers are stuck, that opens the door to not just scalps, right? That opens the door to a potential squeeze play to get this thing really rocking and rolling. Scalpers will be looking for an upside objective back up towards, guess what, right around the open again, at around 79.75. But remember here, right, there's some serious potential. We have squeezed traders who didn't get their objectives filled on the downside, and they could be looking for a lot more to the upside if these bulls are taking over. And we just had a POC shift that the market's now closing above. If we start demonstrating more proof off of this POC, it's likely that those sellers are going to realize, wait a minute, this isn't going to happen. And we start seeing them jump ship. And that gets not only the squeeze, but the breakout above the highs and then potentially even larger rallies. So again, there is a 0.5-to-1 possibility, but a 2-to-1, even though the target would be through the highs, contextually now makes sense. We've seen the sellers try to satisfy an objective and fail. 2/3 of them succeeded, 1/3 of them failed, and that 1/3 is going to be the attempted fuel to the fire. If the bulls are going to take it above the 77.75s, we need to see continuation to the upside that's at least relatively decent, and again, maintaining support off of this 76.25, because that's going to be our line in the sand. If they start losing that, yeah, the stop's down here, but I mean, if we start losing this, kind of game over, you know? So realistically, that's going to be kind of the mindset going into this, as if we can get a continuation to the upside, we're probably going to get a scalp, and more likely even a larger swing. We've got a continuation back up. Oh, man. Now, more importantly, look at the support. Oh, boy. That is some fantastic support that came off of that low. 43.76 found some massive rejection. That's what we need to see. That adds so much proof to the context that's going on here. Now, again, scalpers will be looking for more momentum to the upside. Let's see if the POC has changed. It did. Okay. So we have a continuation with a POC back to the upside at 43.78. That may suggest that buyers who are buying the dip are exiting on this rally. More contextually, though, the candle is closing still above that POC. We just saw a retest of the last one almost perfect. I mean, literally perfectly. You can't ask for better than that. So we know what's going on here, right? This is just kind of bouncing between 3 different places. Sure, I'm sure that positive there are some scalpers who got in who are looking to take profit, but this volume increase could be new buyers coming in given the context. It makes a lot of sense. So we've really got to kind of keep an eye on how this interplay is going on. Really strong continuation to the upside. There's no candle gapping. We might still get stuck here for a little while, but this is a good start. And notice again, as far as when I was talking about candle gapping, I was meaning like candle gapping from top to bottom of another candle. But in this case, we do have candle gapping from close to open, which is up. And that's the first time that that's happened for a while. All of the other ones have been down. So now we're starting to see things shift a little bit. Like, wait a minute. This isn't the same thing that we were just looking at. Things are changing, and we know why. The context would dictate that sellers are stuck. They tried getting the settlement filled. They couldn't get the objective done, and now they're in the squeeze factory. We just have to we really have to keep them above this 76 quarter, but this POC shift is definitely something we need to consider. Okay. Even if we were considering the market closed above it anyway, it didn't really matter. The POC stayed the same, and that's, again, where the entry point is. That's not a surprise. The assumption here is that these are longs. As far as the scalping consideration goes, I believe that was... Hang on, let's just get the actual number. Hasn't hit yet. That'd be right there. From the swing trade perspective, that is still quite a ways away. Okay, we've got a continuation to the upside and a doji. Scalpers are satisfied, and again, we see a response there. I don't believe in coincidences. Okay, this is why the market has made me not believe in them. We have scalpers who are taking their targets. What a shock that scalpers are taking their targets in a range after buying the lows. Whoa, weird. Now, again, we know the context here. Sellers are possibly stuck at the base and they're possibly getting squeezed. Let's creep the volume a little bit further forward. Now the POC is a little bit further up. And notice, again, even though it's a doji, even though the scalpers are taking their profit, they're still closing above the POC. They can't get this thing to go down. So now here's another concept. If scalpers, because they've already been handed their objectives, are looking for another way in, while swing traders are still long, and they might be long for a little while, buying underneath this doji, given this context, makes a lot of sense. Looking them to pick up like 77.50, buying a dip underneath it. If they really wanted to make sure they get filled, then buying the low of it, because, you know, I know my luck. I'm not going to get filled if I try to go a tick underneath it. But just looking for a dip underneath this zone, because realistically, it's only got to go like 2-3 ticks to be considered a dip, right? Getting underneath that previous candle. So 77 quarter, or like a market if touched at 77.50 or something like that, just to make sure that it actually gets underneath, would be the likely approach. Now, as far as realistic ways to catalog where our stop should go, we actually have some structure now. We've got something to work with. We can go down here. And we can see the beautiful thing about this is the target's inside the highs for the scalpers. So if they are going to buy down here, and I'm going to assume even with a market if touched, you're probably going to get filled there. I'm going to assume that they're going to have to go back up to the 80-50s to actually get the job done. And that's the assumption of a stop below the lows, ahead of the, because remember, if they make it down here and you haven't exited yet, hopefully you've exited by then, but if they make it down here, they're probably going to fill the settlement, and they might go a little bit further. So there's some context that's obviously changed. If it gets that far and you haven't exited yet, it's got to be either a giant bear bar or you're just hanging out too long. But realistically, scalpers have a really strong reason to want to try to buy underneath this previous candle to get a dip continuation to the upside. And that goes for any of them, because it's not the first time. I mean, look at this, right? Back here, the only time it actually broke a previous bull bar was right at the beginning, and then nothing, not even these, all the way up. So, I mean, you know, you can see when they do finally pull back for the first time after a long string, you'll usually find a lot of buyers there. In this case, we've got from the bottom 1, 2, 3, 4 now going all in one direction. That's very different from what we've seen in the past. Usually it's been 3. We do get a little continuation to the downside, an incredibly weak bear bar. Now, again, I know my luck. If I were looking to try to get a fill directly underneath it, I probably wouldn't have been filled. Market if touched orders obviously would have been filled. But even this bear bar closing, once again, right above the POC, buyers will even buy the close of that bear bar because their targets, if they look at where it puts it, their target is right at the top. Now, you know, maybe try to get a slightly better entry just to ensure that you're in the right location. But this makes a lot of sense where if you didn't get filled, there's still reasons for buyers to come in because their targets are right at the top. Maybe 1 tick offset, you might be just underneath the scalper's target, but the probability increase is insane. Humongous bull bar. Wow. All right, so big bull bar to the upside. If we continue this forward from the swing trader's perspective, they're still in. We did break above and pull back to break even once. That is to be noted. I will allow swing trades to come back twice. That's fine. But if they start coming back a third time, I'm wrong or I don't want it. It should have gone by then. So we've come back once. If we continue back again, that's fine. But if they come back a third time after that, we've got problems. We've got a nice bull bar continuation to the upside, a fantastic bull bar to the upside. Definitively looking for continuation. And bulls will be definitely looking for that continuation. Now, notice what also happened here. Let's creep the volume forward. See if that moved. It didn't. It stayed above 78. Continue this further forward. Stayed at 78. So realistically, if shorts were trying to short this to the downside and they failed to get it to go, they may have also utilized that pullback as a way to exit at break even. And given the response, I think it's fair to say that a lot of traders may even choose to buy the high of this bull bar to get another continuation to the upside. It's incredibly awkward feeling because your scalp target even is above the highs. So what I would prefer, given that context, is that the market pulls back just a little bit to ensure that my entry point and my scalp target are in a logical zone that actually fit. One more tick back. There we go. So if we have an entry point that's hovering at 79.75, that would mean that our scalp targets back to the upside are still within the highs. And as far as the S&P is concerned, it's a 1-point scalp. Pretty straightforward. So you could buy above the highs. I'm not a huge fan of that. But then again, the trade-off is you might not get filled. It might not pull back. So, I mean, it's up to you. The context is where it all comes in, and the context is aggressive. Do you want to wait for the pullback and miss the chance for the rally to the upside to finish off the 2-to-1 bulls? Or are we going to, try to get a little bit of a pullback and treat this as though it is still a range, right? Remember, this is a different day. Don't get tied up too much in the fact that we have this massive rally up in the sense that, oh, well, this same exact strength should show up here. That's not the case. But we should at least see them try to reattempt into new highs. So a break above the new highs and at least finalizing this bull move to the upside makes a lot of sense. Are we going to reach out and test the 2-to-1 objective for the bulls? Well, I mean, so far, we've barely been able to get under a POC. It's definitely possible. There's a lot of reasons why bulls are going to be looking for a continuation here. So let's see if they can get a little bit of a pullback. You got to love that, right? Again, I don't believe in coincidences. The fact that the bear bar closed directly on top of that entry point, and the fact that the wick was right at the target area, I don't know how, in which way it went. It might not have hit the target yet. But all of these things, I have an incredibly difficult time calling coincidences. This is very obviously the bulls accumulating into this dip, so aggressively so that they've actually closed the market back to where, again, a scalper's target is inside the highs. It would not be a surprise in the least to see another bull rally to the upside. But again, we also know we've got some potential for those bigger targets. Holy crap. All right, so all in one, huh? Jeez, oh Pete's. So obviously the scalpers were filled if they were buying into that dip. Obviously, basically everybody on the planet got filled on that rally higher. And notice where the market stopped. I don't believe in coincidences. I don't believe in coincidences. I don't believe in coincidences. These things happen for a reason. And you see it over and over and over played out like this, even at the target zones. That's why the market's doing what it's doing. Now, we're already getting into the 10:45 and 11 o'clock zone, and this recording is getting pretty long. But that's kind of the idea of what we're looking at here in terms of breaking it down. When I'm looking for a swing trade, I want to try to understand that, hey, I'm taking a swing trade. I can never be better than 50-50 if I were just closing my eyes and throwing a dart at a board because my reward's twice the size of my risk. At best, I could never be more than 33 if I were closing my eyes, right, based on probabilities. So with that mindset, then, if I'm trying to get as much context in my favor as possible, that's why I'm waiting for the psychological shift. And you can see, when you see this repetitive proof over and over and over and over again, maybe don't expect it to happen in one candle, but it's a really good reason why we watch context so aggressively, because it allows you to get out of your losers early, and it allows you to stay in those winners longer to try to get those bigger targets. Really great example. It just happened all in one candle. So that's going to do it for this one. Hopefully you found it useful, interesting, and entertaining, and something you can add maybe to your tool belt if you found or picked up something new out of this one. As always, if you have any questions, feel free to drop those in the comments below, or feel free to send me an email if you have a slightly longer question that needs answering, jhb@ssftg.com. Until the next one, I hope you had a great one, and we'll talk to you all then. Thanks.